Are seeing in the currency markets is the rupee holding firm in large part because of global cues that are working positively for the domestic currency. But the negative really is the trade deficit numbers that came out yesterday, which ought to weigh on the rupee. Now, while imports fell by 7.4% and, of course, exports also fell by something like 4%, the trade deficit in absolute numbers actually widened. So you had a trade deficit number of $16.3 billion for the month of May, which was higher than the $14 billion that you had for April, which ideally should continue to exert pressure on the rupee. The positive, of course, continuing to work for the rupee is the fact that crude oil prices continue to trade well below $100 a barrel. It is below $98 a barrel as we speak. Now, in the fixed income markets, you are seeing some amount of confusion, if you will. Once again, after the governor of the Reserve Bank of India, while speaking in Hyderabad yesterday, said that we will have to focus on growth. We will have to focus on inflation, and that growth may have to be sacrificed in order to kill inflation. And that's a comment that's being viewed by the market as the likelihood of the RBI not possibly doing anything on Monday. Even that quarter percentage point repo rate cut that a lot of people were expecting is somewhere beginning to go away purely because of what the governor said. But you never know. You still may see a quarter percentage point cut. But I think anyone who is expecting a half percentage point cut should give up those hopes, because that's quite likely is not going to come. Remember, inflation also for the month of May came in yesterday at 7.55%, higher than the 7.23% for the month of April.
Okay.